All right, let's take a look at the levels. As Andrew said, we were up all day and then sold off at the end, and you can see that that's true by the S&P here, down now more than 1% to 1060. Take a look at the Dow, falling more than 80 points to 97.48, and the Nasdaq coming down about 0.7% at the close to 21.31. All right, to help us break down what drove the markets today, Suzanne O'Halloran joins us from the floor of the New York Stock Exchange. Mike McKee gives us a breakdown of the Federal Open Market Committee's statement after their meeting in Washington. And still with us is our featured guest, Fred Dixon from D.A. Davidson. Suzanne, I want to start with you, though, on the floor of the Stock Exchange. Kind of a sell-off into the close here.
That's right. Traders here saying we had a little profit taking in the final 30 minutes of trading, Matt. I mean, the S&P did hit the 1080 level minutes after we got that decision from the Fed today. And, of course, we did see that pair back today, of course, just in the last few minutes. So, again, profit taking. Investors here do remain fairly bullish that stocks can move higher, especially after hearing the Fed saying the economy is picking up and interest rates will probably remain right where they are today. Also, we did have some strength in chip stocks today. Xilinx was a leader there, the chip equipment maker, who's seen its sales forecast demand improving for Xilinx. That helped lend support to the Philadelphia Semiconductor Index. A lot of those stocks actually rose today. We know chip stocks and chip companies have actually been releasing positive news about forward orders. That's a sign the economy is picking up as well. Where we did see the weakness was energy stocks falling over 1% today. First off, we had inventories unexpectedly rise this morning for oil and gas. And also, it's the coal names that really took a big hit today. We had the team at McGuire Limited actually turning more cautious on a number of the coal companies because of weak demand coming out of China. That's their view. So we saw names like Massey Energy down about 7%, Peabody, Consol. Those were really your weaker stocks within the energy sector. Carol, Matt?
Suzanne, let me ask you about AIG, though. This is a stock that's seen some wild swings over the last couple of weeks. It was up today on particular news. I know Credit Suisse had something to say about this company.
They did, and AIG shares held up relatively well because Credit Suisse commenting on the potential that the government's rescue plan may be restructured. We know Hank Greenberg is proposing that idea, former AIG CEO. Credit Suisse says that idea is far-fetched, but we did see AIG shares rise. Another theme that we're talking about, Carol and Matt, is there is potentially a lot of interest in this stock from day traders and some of the larger hedge funds. The Wall Street Journal reported on this today, and we've seen extremely heavy volume in shares of AIG, over 100 million shares, Carol. Today, we didn't get that. We didn't crack that level. We were above 60 million, so perhaps that interest is dwindling. And Credit Suisse, of course, reminding us that this company is still owned by the U.S. government. Back to you.
All right, good reminder. Suzanne, thank you.